There is some bit of catch-up that needs to be done on that front. There you go. Mid-cap 100 is up nearly 1%, outperforming the benchmark indices in trade. And if you see in terms of the small-cap 250 as well, clearly outperforming the mid-cap as well. Overall, if you see in terms of stock-specific action, a lot of movers and shakers today. All cargo logistics as well as Gati, both of these counters are seeing some smart moves in today's session. JB Chem Pharma, a strong move on that one as well. The volumes have been pretty high. LIC is another one. Some cooling off has happened, but that's another stock that we are focusing on as well. IFL, Varun Beverages, Polycab. These are a few of the interesting names that are on our radar in today's day of trade. And apart from this, let's pull up a few other names. Ami Organics, on the back of the block now, clearly you have the ex-promoters who've exited, so that overhang has gone. And now you have a lot of good names that are entering the stock, so 4.5% up move coming in on that counter. GMR Airport Infra on the NIIF investment. Now this is the second investment by NIIF out of the three that has come in, 3.5% up move, and strong moves on the GMR Infra in the last couple of trading sessions. Siemens also had an analyst meet, so a couple of brokerage reports that have come in with regards to where Siemens go. Now the stock has cooled off after opening. MRPL is also seeing a good volume build-up in trade today. ITI is seeing a good volume build-up. Sansera Engineering has seen a block as well. So these are a few of the counters that we will cover during the day as well with more information. But let's quickly shift focus as we embark upon the year-end festivities and everyone is actually getting into the holiday mood. There is one company that is gearing up with full gusto, and that company is Mahindra Holidays. Let's pull up that counter on the screens and see what the stock is doing in trade overall. Strong moves today as well. Let's pull up a YTD or even a 1 month chart to understand what's happened in the quarter. There you go. This year we have seen some smart moves, but it's been a slightly volatile ride. To discuss more in terms of where the company goes and what's in store, we have Kavinder Singh who joins us. Kavinder, good morning and welcome to the show, and a pleasure to speak to you after really long and overall in terms of the outlook.
Yes, pleasure is mine too.
Kavinder, my first question coming to you is, how has the World Cup, the festive and the holiday season been so far, if you have to talk about the third quarter, because we're pretty much at the lag end now?
Yeah. So, as you know, our business is a membership business. We have 300,000 approximately member families, 290,000 to be precise. We have a very strong business model, a very resilient business model. And we are seeing occupancies which are very robust in this quarter, approximately 84 to 85% occupancies. In December, we'll probably touch 90%. So we are seeing a very significant uptick. In our business, families come to holiday because they are members at our resorts. And our resorts are obviously now running full towards the end of the year. So this is as good a festive season as it gets.
Strong occupancy coming in towards the lag end of the year as well. Overall, from here on, what's the plan expected to look like with regards to where room additions, member additions go?
So as far as the room additions go, we have gone on record that we would like to double our room count from 5,000 keys to about 10,000 keys. What we did probably in the last 26, 27 years, we would like to do it in the next 6 years or so. The capital expenditure plans are already in place. We have about 835 crores of capex in play to deliver 690 rooms in the next 1 to 2 years. If I were to look at the movement forward, we are aiming to take this 835 crore number to approximately 2,000 crore as we move into the next year. Our aim would be to very, very quickly step up our run rate of room additions, which is roughly 375 to 400. Next year, you will see much higher run rate than this number. And as far as capital expenditure plans are concerned, I already outlined that we have, at this moment of time, 2 greenfield projects that are underway. One in Ratnagiri, another is in Thiok. One is in Maharashtra, and other one is in Himachal. And we have an expansion project going on in Himachal. And then we have a few other projects which are going to be lined up for breaking the ground soon. We are also working very closely with the governments, state governments, PPP model. We have signed an MOU with Uttarakhand government, 1,000 crore investment. We have identified 4 pieces of land already. With Orissa government near Chilka Lake, we have been in principally awarded a land of 50 acres. Again, the work is going on with the Orissa government. So you will see a lot of action in the PPP space. And that is something that we are now seeing a lot of traction happening in that area as well.
Right. So, Kavinder, with all of this said and done, this actually outlines your capex plans, what the number of rooms could look like, what you're doing with the government as well in PPP projects. Taking this into consideration, by how much do you think that your member additions could look? What would that look like?
So, as I mentioned, the capex plans are robust. Our room additions are obviously robust. And as far as member additions are concerned, that's a question that you asked. We have seen significant momentum. As you can see that at the H1 level, we have grown our member additions by about 17% on YOY basis. We see the momentum continuing on the member additions as well, because when we add inventory, in a way, we are signaling the market that we are confident of adding members. And therefore, you will soon see us crossing 300,000. That will happen sooner than later. And we have launched new products. As you know, that we have launched a 15-year product. We have launched a 4-year product. So we are seeing, again, momentum in the member additions as well. We have digitalization of the member journey on the cards, which will help member to buy timeshare online. So there are a lot of actions that are taking place to ensure that the member additions keep pace with the inventory additions.
Okay. So that's an interesting one to watch out for. One more thing, Kavinder, that I want to talk to you about is the turnaround in HCRO, right? Now, that is something which is helping as well. What's the plan ahead?
So the turnaround in HCRO actually happened last year, where we delivered 5 million euro EBITDA. This year, we are going to deliver more than that. If you look at quarter three performance on a YOY basis is going to be significantly superior than last year, same time. So we are seeing, despite the effects of Russia-Ukraine war, despite the fact that the Europe is having its own problems with respect to interest rates and consumer sentiment, the timeshare sales is quite robust. We are seeing timeshare sales moving up very, very well. Yes, there is a bit of a pressure on the consumer spends in the spa hotels that we have, but at an overall level, even the last quarter, which is a seasonal quarter, we delivered 1.6 million euro EBITDA. So we are very confident of crossing 5 million euro EBITDA, which is for the full year. And so there is a turnaround which is taking place, and we are getting, as days pass by, even more optimistic into the future with reference to holiday club resorts, despite the macroeconomic situation not being so good.
Okay. So in terms of recouping the investments there, what's the, what are you targeting?
So, we are not financial investors in that company. We have taken a strategic view when we invested in that company. We believe that timeshare, that too in Scandinavian market, they are leaders. There are not many timeshare players in that market. The Holiday Club Resorts is a very respected player. We do believe that over a period of time, we will be able to work out some synergies with India and the Holiday Club Resorts, where a lot of Indians, after having done Europe travel, would look at Scandinavia. So we have a long-term view on this investment. And we believe that, we are in the business for the long term. And since the turnaround is happening, it's giving us even more confidence.
Right. So, Kavinder, with all of this said and done, right, how are you expected to end FY24? That's number one. And what's the key milestone from a growth perspective that you would like to actually achieve?
So, the FY24, in my view, would have one big thing that we have would have achieved as we end FY24. We were, let's say going at a steady rate of 250, 300 rooms. Then we stepped it up to 350, 400. Now we are saying we are going to go from 5,000 to 10,000 rooms. And that decision was taken in FY24. And we started moving extremely fast, both in terms of the greenfield projects, expansion of existing resorts, as well as also leasing and acquisitions, by the way. As we speak, there are a few resorts that are, under acquisition, and the PPP project. So I would really see this, year as an inflection point in terms of creating supply. In India, the leisure market is very underserved. It's only 28,000 rooms in the leisure market, while even smaller countries like Bangkok, or even a city like Bangkok or Dubai actually have higher, leisure accommodation. So we believe that India is an underserved market. We have taken a call to expand 5,000 to 10,000 keys with significant amount of capex outlay. In our business model, we don't need to borrow. We have 1176 crores rupees of cash available with us. And we have very, very confident of maintaining occupancies. And these are the two typical problems in the hospitality space. So we believe that this year is an inflection point. We are moving into a very high trajectory in terms of supply. As I said, next year we will add much more than 400 rooms that we have been adding. And as a result of which the member additions are also accelerating. New product lines have opened up. As I said, 15-year and 4-year product. We are seeing momentum there. So this is a year where we have set the ball rolling in terms of momentum of the business is concerned. And I believe this is a momentum which is likely to continue for at least 5 to 10 years.
So that's a very positive commentary, Kavinder, that I'm getting from you. One thing I want to ask you is, with regards to the extensive MOUs that you've been signing with state governments, right? AP, around 3 resorts, if I'm not mistaken. Uttarakhand, you've done already 5 resorts. And plus. How much do you think these PPP models will be a part of the revenue contribution, and how much do you think you will be able to grow it to?
So, the way we look at it, that for us, supply has been the constraint. So when we move from 5,000 to 10,000 keys, out of 5,000 keys, how much can we get out of the PPP? Because the PPP models actually, in a way, serve two very big purposes. One, we are creators of destinations. You would appreciate that when PPP models come, the government wants to develop newer destinations. Since we are the creator of destinations, we opened a new destination in Jhanjeli in Himachal in the last year, and the resort is doing extremely well. So the governments want us to actually popularize new destinations, which is the need of the nation and of the state. So to that extent, we are fulfilling that purpose. Equally, we get an opportunity to, at a low cost, a resort, which we are able to create faster in a newer destination. So when I look at these two advantages, so I am saying that if out of these 5,000 keys, if I can get 2,000 keys or thereabouts from the PPP or even more, that would be quite helpful.
Right. So I think that's something that everyone will watch out for as well. Thank you, Kavinder, so much for joining us on the show. Always a pleasure to speak to you and get insights from you, specifically with regards to the holiday season as well. Thank you for joining us. So that's Kavinder Singh of Mahindra Holidays, clearly highlighting how the festive season as well as how the holiday season is expected to pan out, the growth plans and the way the capex is expected to increase from here on, taking the demand into consideration. But let's quickly slip into a short break. Up next, we have Rahul Guha, the Managing Director and CEO at Thyrocare, who joins us to discuss about price hike plans and how they plan to tackle the rising COVID cases and if that is really the situation. Please stay tuned to NDTV Profit. Welcome back. You're watching the Small and Mid Cap Show. Now, clearly, if you see in terms of where the broader markets are concerned, a lot of market analysts, fund managers are of the opinion that there is a lot of froth and probably there will be some bit of profit booking that could be coming in the small cap space. And this is because the kind of run up that we've already seen so far, plus the valuations are extremely expensive, though the fundamentals are not really matching up to that speed. Now, taking that into consideration, yes, there are a lot of pockets that could be entry points for buyers as well in the small cap and the mid cap space. We spoke to Saurabh Mukherjee of Marcellus Investment Managers, who actually spoke about, why the large caps will not sell off over the next 12 months and how it is likely that the small cap will be the space which could see a sell-off and there could be a correction coming in there. Let's listen into a bite of that conversation.
If you take a 12-month view, it's difficult to see why large caps will sell off this point in. If anything, foreign investor flows are highly likely to come in over the next 12 months and lift large caps up, especially the sort of large caps that you and I have discussed over several years. The converse, I think, applies to small caps. I've been talking about several years about how the economy is consolidating. Town after town, city after city that I visit, I'm seeing the same story. Well-run large companies grabbing huge chunks of the economy, consolidating the economy. So small cap companies' profitability has been under pressure for decades now. It's a structural move. As you integrate a country, larger companies become more powerful, they pull away market share. And in that context where the fundamental support for small caps is not there, I think small cap valuations correcting over a 12-month period are highly likely.
So that's with regards to where the broader market view goes. But also, diagnostics in India is a space that Saurabh is absolutely positive on. Now, he's clearly indicated that that's something where they are seeing a good amount of investments happening. Consolidation is what is expected to continue in this space as well. And if you see from a pricing perspective, there is absolute room for growth. Let's listen into that bite as well.
Even big investors in diagnostics before COVID will be big investors in diagnostics regardless of whether the next wave of COVID comes. And here's why. This is a sector which is roughly $10 billion in size. There's only 4 or 5 well-managed organized players, and they account for only 20% of the market. 80% of the market is fragmented, it's mom and pop. Private equity and venture capital money had briefly entered the sector during COVID. Most of it has gone away now. So the incumbents, the well-run incumbents, have plenty of pricing power. That's been very evident over the last 12 months. Their pricing power has been evident. So, for example, Dr. Lal Path Labs, if you see in the last couple of quarters, profits are up 40-50%. I suspect that will continue. So this is part of our large cap portfolio, consistent compounders, and the mid cap portfolio. Similarly, Vijaya Diagnostics, which is in our small cap portfolio, has been consistently gunning out 25-30% profits over the last 4 or 5 quarters. In fact, they acquired a firm in Pune yesterday. So I think consolidation will be the norm in this sector as well-run players, Dr. Lal in the north, Vijaya in the south, as they buy the mom and pop shops out. As India gets richer, as India gets wealthier, older, there is bound to be more demand for these services. Pricing power is high for these guys. Return on capital is 35-40%. That means they generate a lot of cash.
Right, so that's Saurabh Mukherjee with his views with regards to the diagnostic space. But to discuss more, let's see what it actually means. We have Rahul Guha, who joins in from Thyrocare. Rahul, good morning and welcome to the show. My first question coming to you is clearly there are 2 things that all of us are talking about. One is the resurgence of COVID, whether it's a panic situation or not, and if that is something which is leading to this kind of an up move. And secondly, the price hikes that could be on the anvil in 2024. How are you picking up both of these?
On COVID, look, I don't think there's any reason to panic at this point in time. Yes, testing numbers are up, actually in multiples of what they used to be, but still off a very, very low base. So I think it's too early to start panicking. I would again encourage everyone to follow safe practices and to not panic at this point in time. When it comes to pricing, I think overall the industry has already taken a substantial price move over this year. Almost every large player, as you saw in the video, also has taken up pricing. So almost all our reagents are imported into the country, so we always get affected by the dollar. So I think to compensate that, normal price increases, I would say, would be on the cards. But I think 2023 was a special year because in the previous year there was so much price competition and people, really brought prices down and made it difficult for people to, normalize their pricing structure. I think 2023 was the year where everyone came back to a more rational business operating mindset. And so therefore prices came in line with the cost structures. I think 2024 will be like a regular year in the past where effectively to compensate for your increases in costs, largely because reagents are primarily imported. So I would expect a normal price year as we go into 2024.
And if you have to quantify that, Rahul, quickly, how much would that be in 24 on an average?
Typically between 3 and 5% is what the industry has taken. So I would expect it to be in that range.
Okay. Apart from this, if you see from a business perspective, earlier as well when we've spoken to you, clearly, the roadmap the company has is to boost a strong 15 to 17% growth in the pathology business. Is that still on the radar, or do you think you'll overshoot these numbers?
No, I think that's a good estimate to where we will land. As I said, our franchisee business I shared last quarter, and we continue the momentum. It's doing very well, consistently been growing at 20% over the last couple of quarters. Our partnership business also grows at 20% plus. So overall, I think our core business is doing very, very well. We, of course, exited a lot of government contracts and, decided to focus more on the private business. So that still sits in our base. So that's kind of what's pulling down the overall number. But if I look at our core business, I think it's doing very, very well from a growth point of view.
Right. In terms of the radiology business, investments are being planned between 23 to 25. What's the outlook on that one?
Our radiology business has been a turnaround story. If you remember 2 years ago, the business was not doing very well. Today, we've been clocking 20% growth. Actually, last year we did close to 40% growth, and then on that base, we continue to grow. So I think there's a lot of scope in the radiology business. There is no integrated large pathology plus radiology player. And our ability to turn around the nuclear business, bring it back on the path to profitability and grow it has led us to be very bullish about the radiology side as well.
Right. Rahul, one quick question on, I'll take it as a two-part. One is in the international expansion strategy where you already have a JV with Tanzania. What would that translate into in terms of revenues? And secondly, the recent order wins that you've had with regards to the TB tender, as well as, in Assam and other regions, what would that contribute towards?
I think Tanzania, it's too early, to really bake in a substantial upside from that. Our lab will only go operational in February of this year. All the work is going on to be operational by 15th February. So I think it will take 1 or 2 years before, we are able to substantially see the scale of Africa in our P&L. It's our first JV in Tanzania. So I think it will take time. Just one correction, is not with the Tanzania government. It's with a private player in Tanzania. And our estimate is, Africa can be a substantial market for us. But with Tanzania, I wouldn't bake a substantial upside into the P&L at this point in time. Maybe in a year from now, I'll be able to give you more specific numbers. On the government business, we've won a few districts in Assam. We've won for the state of Gujarat, which is all in the public domain. The total of that business is, again, not a large number. It's about 5 to 6 crores. So again, I think it's a long way to go before we see a substantial focus or substantial amount of government business in our portfolio. We are being cautious on that front, really focusing only on technologies that we know very well. And so therefore, I would say it's going to be a slow ramp up.
Right, but there are growth prospects which are already on track as well. Thank you so much, Rahul, for joining us on the show. Completely running out of time, but we will catch up once again to have a detailed discussion on the space, the diagnostic space as a whole, because that's something which is really hot from a market perspective as well. Thank you so much for joining in. So that's the management of Thyrocare giving us the growth plans from here on. Completely out of time, but that is a wrap on this edition of the SMID Show. Thanks for watching, and lots more lined up on NDTV Profit. Please stay tuned.